Well, let's bring in our senior markets correspondent, Kevin Green, as we get you set up for this trading day, which is going to be consequential as far as some of the economic data is concerned. What levels are you watching this morning, Kevin?
Well, good morning, Sam. Yeah, obviously we are seeing several sectors that we would like to see leading the market doing exactly that. Communication services up over 2%, information technology, as well as consumer discretionary, which under the hood actually looks pretty good over the longer term time frame if you're kind of looking at some of the components. But today, obviously, we are trying to retrace some of those losses that we saw from yesterday here and kind of hitting into a middle of the gap zone that we actually created yesterday. If we're looking at the intraday levels to the upside, I'm looking at 64.60 as your first major area of resistance. That's somewhere around that same level that we see for the 200-day or 200 period moving average on the 15-minute chart, which has been an area of support in the past. Now it's going to potentially turn into an area of resistance. Any further breakdown of the downside, 6,400. Obviously, that was a pivotal level yesterday, and then you're looking at 63.60. So these levels are still actually fairly wide. That also complements volatility still being a little bit elevated when you're looking at the VIX, and hopefully we are able to see kind of this rotation, not only just back into tech communication services, but having it broaden out just a tad bit more, so we're not so weighted into just maybe 2 or 3 stocks that are seeing obviously healthy gains this morning because of the news around the antitrust case with Google.
Yeah, tech and communication services no doubt doing the heavy lifting this morning. Communication services up at 2.7% right now. I'm just wondering, shifting our focus to the Treasuries, what you're seeing as far as volatility there. We saw the 30-year yield topping 5% briefly overnight, coming off a bit, but still within arm's length. How are you keeping tabs on things there, Kevin?
Yeah, we actually did see a break of trend when you're looking at Treasury volatility. And so we're going to be looking at the MOVE index in blue here. We have seen, obviously, this volatility index making lower lows as well as lower highs. But actually, what we saw for yesterday was a breakage of that trend. And let's see if that's going to continue. The higher the volatility that we look at for the Treasury market, if you're looking at 2s, 5s, 10s, 30-year Treasury maturities and those options there, as those implied volatilities actually increase, it does coincide with equity volatility. So not surprising that we do see this direct relationship, but if that does kind of increase as we lead up to the jobs report on Friday, leading up to the Fed meeting, that could also once again kind of create a near-term volatility for the equity market. And then when we talk about equity vol, it doesn't mean that the market automatically has to go down, but we could actually see some intraday gyration actually taking place here, which does provide some opportunities for traders that are kind of trading on an intraday basis, but could give us a lot of head fakes as well. So a nice bounce today for equities just as a whole, but I don't think that we're done yet, just given the fact that once again we just broke a pretty decent trend here that's been intact pretty much since April to early May this year.
Okay, and the dollar, we've seen the DXY back off a bit off yesterday. How are you keeping your eyes on that one?
Yeah, so the dollar index, I mean, if you're looking at a weekly chart, it's still looking fairly bullish here. We have seen a consolidation around this 97 to 98-ish area. We have seen, obviously, a fair amount of movement because of what's happening overseas with global yields, especially on the long end of the curve. You talked about the 30-year just for the U.S. here. But when you're looking at this technical setup, that MACD is still in a bullish formation with that 12 EMA above the 26. Now, it's still below the 0 line here, but this could be basing in order to kind of break out. And the reason why I kind of bring that up, you're going to see this highlighted yellow or this circle in the past here at the left side of this screen. This kind of aligns with the UK or the Liz Truss moment that we had back in 2022, where they had a budget proposal that hit and the market obviously was very spooked by that. We saw Liz Truss was only in that position for around 15 days or so, and you did see that dollar actually making those highs at that same particular time here. And the reason why I also bring this up, if we go to the next chart, it's a comparison between the dollar index and gold. And if we go back and look at a 5-year weekly chart, when we had that same type of situation taking place, that's when gold actually bottomed out and started making its rally for the next 2.5 years or so. That's when the dollar was actually fairly high. So could we actually have this lead up to this UK budget deal that's going to hit and be voted on, I believe, on November 26th? The leading up to this event, which has created a lot of bond volatility on the longer end, is that going to be another reason for gold to continue to move higher? And then also, do we have this flight to quality on the commodity front that actually pushes the dollar up a little bit more? So this is something that's not a today event or tomorrow event, but this could be over the next 60 days, a very big development when you're looking at the commodity space as well as the US dollar as a whole.
Yeah, and Ben Emmons' words, the tremors of Liz Truss are returning to the bond markets, something very important to keep an eye on over there. Thank you so much, Kevin Green, for getting us across that. Appreciate it.